Adcorp obtained a 7% rise in its headline earnings per share to 209 cents. Revenue grew 19% to reach 6.4 billion rand. Richard Pike, the CEO of Adcorp, joins us now for a deeper look at those numbers. Hi, Richard.
Hi, David.
Now, we get onto the regulatory environment of all the companies that have to think about this. You are probably the one who has to do that the most at the moment. Political and regulatory pressure, use of words like brokers in certain kinds of ways. But let's talk the numbers first. You've got revenue up 19% and earnings per share up 4%. Also a dividend. I always think, if the revenue is quite a long way from the earnings, then you've had a bit of a gap somewhere. If the earnings, of course, are higher than the revenue, then you've done something very good.
Yeah.
So what's behind those numbers?
Yeah, if you look at those numbers, as you say, our revenue is up 19%. In that is some acquisitive growth. We bought the business of Paracon, which is an IT contracting business, during the year. So organically, our revenue was up 14%, which we're quite pleased about, in quite a tough environment. And as you say, there was a regulatory overlay, which was quite stressful. But then if you look at our EBITDA was up at about 20%. Organically, once again, if I strip out Paracon, about 10% up. Headline earnings per share up 7%. And then we put out what we call a normalized number, which is taking out IFRS and non-cash numbers of about 4%. But what we've seen is we've seen market share gains, so we're quite pleased with what we've achieved in quite a flat market. Margins have been under pressure, so you're seeing a bit of a reflection of that in that the headline earnings per share growth of 7% is a little bit below what we would have seen on the revenue line. But organically, that 7% roughly recognises or represents, should I say, an organic growth. Yeah. So there wasn't really any accretion in the current year. We only had Paracon in those numbers for 3 months. We funded it via an equity issue as well as a cash raising of about 265 million rand.
How do you measure that market? Because it's individuals that you're talking about, and you're working all the time dealing with people. How big is that market, and what share do you have roughly of it?
We roughly have about 10% share. So there are about 3.9 million contract workers in South Africa, of whom about 900,000 are intermediated by temporary employment service agencies like ourselves. So out of the 900,000, we then roughly have about 10%. We have about 87,000, so just under 10% of that market.
So there is scope there to grow your share.
There is. It's very fragmented. It's quite interesting. There were about 3,500 agencies pre the global financial crisis of 2008. There are now about 2,800. So there's been quite a lot of consolidation. We think that there'll be a lot more consolidation, and that obviously favours the bigger players like ourselves, who have a national footprint. We have a balance sheet, we have empowerment credentials, and the ability to satisfy procurement tenders.
You differentiate within the market. There are markets. There's the blue collar, there's the white collar. How about those?
Yeah, our engine room is in the blue collar space. That is our predominance of what we do, and that's where we've gained quite a lot of market share. That's where a lot of the regulatory pressure has come from, because obviously that environment is typically unionized, whereas the white collar part of the market less so. So we're much smaller in white collar, and white collar would also include permanent placements. And the permanent placement side of the business has done well, and that despite the fact that employment overall is quite flat, but there is a skills shortage, and the skills shortage lends itself to the kind of recruitment that we do, where we're able to unearth the talent that's required in the engineering industry, IT, etc.
Let's talk about that regulatory environment and the political pressure. And it's quite an unusual debate in the sense that words are used loaded with great emotion, rather like nationalisation used to be. So you talked about temporary employment. The word brokers has taken on an emotional content, but in the sense of it being a risk to the business. How big is the risk to the business? Because the debate has been going on for a long time now.
Yeah, the debate's been going on for a long time. Probably for the last 3 years it's been quite heated, but the word broker has been used, but there have been a lot more sort of
slaves,
with slave traders and drug dealers and all kinds of ungenerous stuff. But in essence, what it is, it's a battle of the unions for membership in our estimation. That typically a contract worker is one that is not unionized, and so there's been a fight from the unions to try and ban the practice of labour broking. It looks like we've got a bit more clarity. There have been negotiations at NEDLAC. I think it's important to say there's no consensus. Business doesn't support what the Department of Labour is doing, and neither do the trade union movements.
For different reasons,
for different reasons, but there is a draft bill on the table.
That hints at a compromise, so that it's saying, yes, there are bad practices, particularly the more informal brokers, but the bigger companies like yourselves play a very important economic role. That seems to be the kind of consensus that's been reached.
Look, the Department of Labour has really acted unilaterally because there is no consensus. So it's not a compromise. It's a unilateral stance by the Department of Labour. But you know, there is this sense that there's been unethical behaviour in our industry, and I think that's probably true. But I think that's true of most industries. And I've always said, you know, if the unethical behaviour is around exploitation of workers, it's got nothing to do with the employment contract. It's got everything to do with the morality of the employer.
And I think you've pointed out before, there are laws that can be used to protect workers.
Absolutely. So anything that is exploitative at the moment is illegal, and there's no enforcement. So to bring in more law doesn't make a lot of sense. But it's a political agenda that's at play, and unfortunately the emotive angle has been used to push a political agenda, and the word exploitation, the vulnerability or so-called of contract workers has been used as the fundamental argument. But I think importantly, the fact that there are draft bills on the table means that there is some kind of clarity, and we assimilating what's in those draft bills, we're not too concerned about it. We think it'll be good for us, and the Minister of Labour came out with a statement the other day to say that it will be business as usual for the more ethical labour brokers or temporary employment service providers. So we're quite positive about the way that the whole debate is taking place.
When you talk to investors, what kinds of questions are they asking here? Because on the one hand, they might like the model, but rather like in the health sector, you know, the rewards can be great, but you never know what the regulations are going to do. And in some ways, you could be put out of business, or certainly parts of your business could be. So how do you have to deal with investors?
It's a very good question, because I live close to it and I feel confident about it, and I'm not panicking about it, but someone who deals with it and delves in and out of it as an investor would. It is obviously an issue of a question mark, and we think it has affected our rating. I think there's no doubt about that. But I think the fact that there are these new draft bills, they will probably be put before Parliament within the next few weeks. I think that gives some clarity and some certainty. So hopefully that takes a big question mark off our heads, and it's a question mark that we've lived with for way too long.
Meanwhile, you've had corporate activity, the Paracon acquisition, quite a lot of debt involved in getting that?
Yeah, we bought Paracon for 637 million. There was a cash alternative available to shareholders of 265 million, which is roughly about 40% of the acquisition price, with the rest of it being settled in equity. We took Paracon on balance sheet on the 1st of December, so in the results that we've released, they've only been in for 3 months. But we think it's a very good acquisition. It gives us an opportunity to broaden the spectrum of services we offer. It makes us very strong in the IT sector, which was a sector we dabbled in. We weren't particularly strong in it, and I think in terms of size, in terms of scale, it means that we are now undisputedly the biggest in South Africa in what we do.
In terms of your time and your executive team's time, I mean, how much do you time spend running the business, and how much you spend worrying about the regulatory?
Yeah, the regulatory factor has been a huge disfocus. It's been quite an interesting disfocus, and I must be something of a masochist because I've quite enjoyed it. But it has been interesting because I think we have had our influence on the way that regulation goes in South Africa. But it has been a massive disfocus, and I think hopefully we're coming to the end of that. So I am quite positive that we will be able to put a bit more attention into the business.
Well, either way, you're going to get certainty if there's a bill that's going to be passed into law. In a year's time, where would you be looking for if conditions and winds are favourable?
We think that actually the legislation will be very positive for us. It'll be good for the big players. So I'm very positive about where we're positioned at the moment.
That is Richard Pike, who is Chief Executive of Adcorp.